So as the gold prices have turned significantly volatile over the last couple of weeks, banks as well as some of the other lenders in the market are looking to curtail how much they're extending in the form of gold loans. Now remember, gold loans as a product have risen sharply, about 118% as of August on a year-on-year basis. Just in FY26, banks have extended about 97,000 crore worth of gold loans to the customers. So if you were to look at where the prices have, gold prices have gone, that is causing a little bit of anxiety amongst bankers because they fear that the loan to value ratio currently might be a little challenging to maintain. The RBI allows banks to maintain a loan to value ratio of 85% on gold loans. This is inclusive of the interest that banks are supposed to get paid back by the borrower. If you remove the interest component, that limit comes to LTV limit comes to about 75%. Banks feel that the 75% may not be enough to cover the risk that is posed by the highly volatile gold prices. What sources are telling NDTV Profit is that banks have started cutting down on the LTV ratio to about 65 to 70%. This, they believe, will give some amount of leeway as far as the gold prices are concerned. The other thing that banks are doing, they're also gearing up the recovery as well as auctioning process of gold that they have contracted as part of the gold loan proceedings. So in case of repeated defaults, they want to exit that loan, sell down the jewelry that they have and recover money as early as they can. Banks are also contracting only short-term gold loans at this point in time because they fear that if they take on too long a loan on their book, that may pose significant interest rate risk going ahead. Separately, what bankers are also telling NDTV Profit is that with the recent changes that the RBI has brought in, MSME loans against gold have gone up. And this is something that they're closely watching, whether that has a bearing, whether that business has a bearing on the current gold prices have a bearing on that MSME business. Because if they take on too much risk, that might be a problem for a product that is considered largely safe. Gold loans are considered largely safe for banks, but if the pricing risk continues, then that's going to pose a problem in the future.